So if you've got someone out there that you're talking to, a business owner that you think might fit, how do you go through a process with them to get them educated and get them thinking that this might be a good strategy for them? Okay, the first thing is a conversation. We have, I don't know, probably 1 or 2 conversations a week with business owners about whether or not this could be a good fit for them. We do a basic qualification and risk analysis for them. So we have a very simple form that you or they can fill out, or we can even just kind of go through on the phone. It doesn't take long. Basically what we're asking them is all the questions that we started out. You know, what kind of business are they in? What are some of the risk areas that they have? Do they have employees? Do they have buildings? What kind of gross revenues do they have? What kind of profit do they expect? How much money is going back into the business? How much money are they taking out in salary? How much money could be available for a program like this if it was attractive to them? So we're kind of asking all those qualifying questions just on paper or on the phone that we've already gone through at the beginning. Assuming that that first call goes well, that they're interested in moving to the next step, typically what we'll do is we'll get them on the phone with one of the captive managers that we use. We have a couple captive managers that we use. We use them for different reasons, and we try and match people up with what their goals are. And so, but we'll try and have them on the next call. We'll be with the client and the captive manager, and the captive manager is basically going to be asking them some of the similar questions, but more questions pointed at what kind of risks do you have. And the outcome of this next call is basically a decision by the captive manager that there is a sufficient amount of risk to justify going forward. And generally what we get from the captive manager is a sense of, here's some of the risks that we think could be insured, and here's a range of premiums that you could expect to see if the client picked some or all of these risks to cover. That's what they give to us. And then what we do here is we develop a sort of a down and dirty cost-benefit analysis. So here's what the costs would be. Here's what the benefits would be. Do you think this makes sense to go forward? So at that point, we're having a discussion again with the client. And what we really are looking for from the client is, you know what, this makes sense to me, or it doesn't make any sense at all. Please go away. Now, this doesn't always happen like sort of in an ideal world in 3 phone calls. Many times it takes many more calls to get people comfortable with what we're trying to do here. There are some more complexities to what we're talking about than what I'm explaining, just trying to get basic ideas across today. But again, the cost-benefit analysis usually is enough to get a client to say, okay, I get what I'm doing here. I see what the advantages are. Now let's have a discussion about what some of the downsides could be. What kind of things do I have to watch out for? How can I plan around those, so forth and so on. And a lot of times, I mean, there could be things about the tax issues, but a lot more, at least in my experience, they're around cash flow. What can I do with the money that's in the captive? You know, can I borrow it back if I need it in a business emergency? Can I get it out right away to my kids so that, you know, they can pay for college? You know, whatever. I mean, we've had all sorts of questions come up on that, and we'll talk some more about that as we move on with the call. If the client decides that this is a good idea for them and they want to move forward, it's a pretty easy process. We engage the captive manager. The captive manager is in charge of forming the captive, and there may be some other entities that need to be formed here in the U.S. There's an insurance license application that has to be done, which is it's not mind-blowing, but it does require a lot of information in order to get an insurance license to do a captive. There's actuarial work that has to be done to take those risks that have been identified and price them to make sure that the pricing is reasonable relative to the coverage. Once that pricing is done, then there's another conversation with the client saying, okay, here's how much it costs for each coverage. Which coverages do you want? So until we get to the point where we've got the coverages matched up with the client's budget. Once all that's done, the license is issued, then we go into the writing checks mode. There's a premium payment check. There's a capitalization check that has to be written. There's administration fees that have to be handled, and then finally the policy issues. All of that, once we get through the evaluation, which can go pretty quickly, usually a couple of weeks for evaluation, the implementation is what can take some time. Usually it can take 4 to 6 weeks to get it done. If everybody is clicking on all cylinders, I'll tell you a negative story about one of the cases we worked on last year. I think in August they made a decision to go forward. I think in November we finally got their attention, and I think it was the last week of the year that even I think the last day of the year, if I remember right, is when we finally got license approval. Actually, I think it might have been the 30th, was we finally got license approval in terms of an insurance license, and we're able to get the funding in place and so forth. Luckily, we had a really great CPA we were working with. They understood the accrual accounting rules, and they gave us a lot of comfort that what we were doing was all going to fly from an income tax point of view. So I learned a lot on that particular case, and one of the things I learned is I hope I never have to do that again. So the sooner things get started, the better. Everybody gets backed up at the end of the year, all the providers, all the licensing regulatory bodies. It just gets tougher and tougher, and the one thing I would hate to do is to go through all of this, only have to call the client up and say that, we weren't able to get it done in time. You're not going to get a deduction until next year. Not the end of the world, but just a big disappointment for everybody. So if you've got somebody, the sooner you get to them,